Good morning and good afternoon, everyone. Welcome to Metal Markets, the London Close edition. So we're going to have the London Close in about an hour or so. And in the meantime, we're going to do some hypotheses. Let's see if we can make a couple of trades today. Right. I have been putting out some fires recently on the support side, but I think we're in a stable situation. So yeah, we'll see. This morning I wanted to do my Shanghai fade, but then we lost power and it just didn't really come back for a while, and as a result, no trades have been done. So I figured I wanted my electricity stable as much as possible before I continue the day. All right, let me just set up my screens here. Just forever battling the screen space. Okay, let's begin with gold. See what gold is doing. Obviously, it's falling quite significantly. Let's go, so let's move this for a second, expand the entire screen, and then what I'm going to do, I'm going to use my Blahtech backtest mode to go back to Asia and to see what Asia did. Pre-Tokyo range had a nice little spike, look at that. So what is that? That's a low liquidity spike. We have been losing volume as we have been heading deeper into July and deeper into summer months. That's completely normal. But that also means that these sort of events might be a little bit more frequent. When I look at how Tokyo behaved, it was mainly range bound for a long time, so maybe some exhaustion moves at the top of the ranges here could have been done, but none of my bots picked that up as a viable trade, which means that the volume was probably not within the band that I require it to be in order to execute a trade. And then sometime during London, actually at the London Open, we had a break of the Tokyo range, not the pre-Tokyo range, but the Tokyo range. And then since then, we've just been going down. It sort of pinned itself a little bit around the gamma flip area, and then since then again we've just been going down, down, and more down. Let's switch off the backtest mode now and move on to the next part of the analysis. But I'm also going to have a look at the weekly and daily charts as well. So weekly chart to me looks very range bound. So maybe we can take the hypothesis that 4,000 has been very supportive, and then maybe look to fade the moves to 4,000, and then maybe reverse and go back the other way from 4,000 as like a general strategy from that like massive time frame. Let's have a look at the 4-hour chart. 4-hour chart is kind of coming into... This is still the middle of the swing for me, so yeah, this 4,000 area would be very nice for some kind of a swing long, maybe even an options trade. But yeah, not too much information there. Let's continue to the zoomed in intraday levels and profiles. So first thing, where is yesterday's COMEX value? I don't know how much you can see that on this chart, but this is the value area from yesterday's COMEX. We're pretty far away from that. But let's see how many ticks or even percentages the actual open was. I think it's still just about inside the average daily ranges, and that matters. But let's have a look at percentage. What is the percentage of the open? So I would say this is verging on almost a repricing. it opened minus 1.4% away from the value area. That's a lot, right? So there is a potential for mean reversion back up, but if I see where the 4,000 is, I would be of the camp to try and fade this when we go back to VWAP and 1490 gamma flip area, maybe even 4100. But I wouldn't be looking for a full mean reversion unless we get some sort of an external catalyst, if somebody starts talking or, you know, something happens. So my first hypothesis, just based on how this looks, let's put a text here. This is a text. I'm still trying to learn how to do text and objects and stuff. How do you type? Alright, so let's say that it's looking at where the initial balance was. Let's say that would have to be some sort of a failed auction short from 4090, and currently that's where Globex VWAP is as well. So I'm gonna, is there an arrow or something? Not a line, but an actual, oh, chart marker. Here we go. There we go. Super fancy. So that'll be hypo 1, right? Hypothesis 2 would be maybe an asymmetrical neutral day if that gets up there. So everything is banking on the fact that I wanted to extend the initial balance to the upside, because at the moment we have no initial balance extension. So all of this is just like me guessing. It's an educated guess, but you know, it's still guesswork. And just by the fact that we have average session range high, which is this little tiny yellow line, we have a chop zone as well. So there's like 4080 and 4075. That's gonna cause like not smooth movement throughout that area. But let's just say that once that happens, if we start to bleed lower, and let's say it happens very quickly, I'm not able to catch it, well, what would be next? I would probably be looking for a continuation of some sort to get back down to 4,000. Is that going to happen today? I don't know. But 4025 as a slightly extended target might be on the cards. And that would be what I'd like to refer to as the asymmetrical neutral day, which is effectively a day that starts off the initial balance extension to the wrong side. And it's typically a single print, so it's excess that then continues to the opposite side. But it would be like an extension of that failed auction short. Do I want to be long this anywhere? Maybe if we pop the initial balance lower, maybe if it's a neutral day. But yeah, I'm kind of not really in favor of longing gold today, purely because of the way it looks. But I need to have a couple more hypos as well. So let's just assume that we are gonna end up in a neutral day. So maybe a second choice here, second hypo could be long neutral day fade from this 4025 area. And that's only if it manages to pop the IB upside first. Okay. The third option would be if we reclaim the gamma flip and we reclaim 4100. Then I might have a little bit of space for this to go all the way back up to the value area as a complete mean reversion to the upside. And I think that's you're playing with a toy, Bernie. I think that's a possibility, but we would need a catalyst. However, I'm still going to put it in. So the third hypo, a little bit further out, lower odds hypothesis, main reversion long to bell, but it has to reclaim all of these levels first. And I'm going to have a look at copper as well. But we have our hypos there. So notice how each of these are at different levels, right? They're not like banking on, oh, either or, either or, either or. That's how you get yourself into, like, get yourself a shovel and then start digging, because that's how you dig holes. All right, let's see who's in chat before we move on to copper. We've got Ani, so Verti Trades, kind of crazy. We've got Eloisa, John. D, why did you leave Top Step? Us Top Step. I didn't technically leave Top Step. It's just that they, and it wasn't just me, right? You've noticed that Anne-Marie is gone, that a whole bunch of people are gone. There was a complete change of how Top Step is now. So when I joined them in 2015, and even when we started Top Step TV in 2023, they were still just of the opinion that they're going to make a TV show about being like a fly on the wall in a prop firm. And then somehow it all turned into a mini corporation where you have legal and compliance telling you what to do every single day, how to behave, what to wear, what not to do on the stream. Anytime you wanted to mention a service, you had to go through legal. Like, it's like literally a mini corporation now. And I'm happy for them. Ecstatic for MP, well done. He's just so amazing where he got to in life. Very happy about that. But as a result of that, they all tried to lock us into certain exclusive arrangements. And I don't think that any of us really wanted to do that. And let's just leave it at that. So it was like literally a divergence of business goals of where I wanted to be with my beautiful indicators for Ninja that I was working on for 2 years, all the way whilst I was working for Top Step. And if I had remained there, that wouldn't have been possible. Also, there were other little things that were bothering me. So they went from multiple platforms to one platform. I wasn't in favor of that. I don't think that the white label TradingView is a serious platform for serious traders like myself who trade multiple products, need to undock the screen to place them all over the screens in order to have your nice workspace with your stop losses placed in order. I'm also an algorithmic trader. Most of my algorithms are on Ninja and also on MetaTrader and also on Quant Connect through interactive brokers as well. So it's like it's something that's been a part of my life since 2015. But all of a sudden, in the beginning, they didn't have an API. So when the API finally arrived, I was like, okay, I'm going to transfer everything that I do into Top Step X. So I spent 8 months of my life transferring everything. And then I got pushed into a live account where I found out that the API key wasn't enabled. It's not enabled for live trading. So, you know, if you know anything about me, probably about 70% of my trading is done algorithmically. And I haven't been just a pure manual trader for a very long time, okay? Now, I still have my process and all of my models are based on my strategies that I used to do manually, right? Maybe a little bit dumbed down, but that's what it is. So having that taken away from me, and I was also struggling with a chronic illness at that point. I'm still struggling with it, but it's well managed now. It was just too much. It was too much. And then just the sheer thought of them locking me into an exclusive arrangement, it was like the worst possible outcome for me and my brand and my software development team and all the stuff that I wanted to do in life. So again, I love everybody. Everybody's still friends. You know, I'm still in touch with everyone. You know, Hoop and I talk on the daily. I'm still in touch with all the other coaches. You know, there was no, you know, some big sort of like falling out or anything like that. It was just like, okay, well, for now this won't work for me, but hey, if in the future you decide to offer something more broad, I'm here. You know, so it's not like never say never. I don't burn my bridges. There was no need to. They're a good company for certain type of a trader. They're just, for my use and stuff, it's not really what I signed up for when we started with Top Step TV. So it just changed too much from where we were to where they are now. So hopefully that makes sense. All right. Vital is asking me, why did I choose this time to trade? It is because, Vital, I know that you're not one of my market stalkers, because if you were, you would know why I choose this time to trade. This is my favorite time to trade. In about 45 minutes, we're going to have the London close, but 30 minutes before the London close, we start to get some high probability setups that happen over and over. Usually those kinds of day trading time zones where high probabilities for my products live only happen about 3 to 4 times across the entire 24 hours. One of those is during the Tokyo session. The second one is during the handover between Shanghai and London. The third one, for only 2 products, is the old time, so midday till 2 p.m. when I usually stream normally. But that one is, although it's not a 70 to 80% probability of occurrence of whatever I'm trying to do with the setup, it is 50-50, but usually when you get the move for that time of day, it is a big move, and typically it's a mean reversion of some sort. So that's why it's a, pretty decent time of day to stream. But this one is actually the time of day that if I am not streaming and I'm not doing anything else, I will literally do bots for Asia, then I will trade my Shanghai final hour, and then do nothing until about this time of the day. Why? Because high probabilities, right? So this is the reason. But the whole mechanistic reason why that time of day is a high probability time of day is because you have enforced hedging that happens into the settlement. And it's the same reason for the fades into any other exchange settlement, whether it's NYMEX, COMEX, whether it's MOC for equities at the end of the day, whether it's the Shanghai pre-open, whether, there's always something to do with the mechanical way that the dealers have to hedge into those times of day. They don't have a choice. They have to be flat at the end of the day. And that's why these super high probability setups tend to occur. Ray is here. You see? There we go. Coach Ray from Top Step. Still at Top Step. He's here, right? So there's no, again, people have, when people have heard that a lot of us are not with Top Step, they kind of made stuff up. I used to get like DMs that are like, oh, who made you angry? And I'm like, no one. It's like, what are you talking about? They're like, why aren't you talking? It's like, it's not that big of a deal, guys. It's like, it was nice when we worked there, but we're all friends. And in fact, a few of us are actually working on something together as well, a project. Everyone is, everyone is fine. Okay. Akim says, hey D. The Real Magical X says hi. Sandy, hello, hello. Earring, is it weird for copper C-Vol to be so high in late July? Oh yeah. Oh fuck yeah. It's I think it's because of tariffs, because we're supposed to be going through the tariff side of things, because they are supposed to be temporary, and there should be some news sometime towards the end of July of how that's all going to resolve. Now, tariffs are another one of those black swan events that nobody saw coming, and because of that, we are, potentially seeing the C-Vol of copper being super, super high. Normally in July, if you get like 18, you are just, should be happy, because that's the best that it gets. But now it's very high. Generally, not just for July, but in general, C-Vol for, at this time of the year is enormously high. And since we're doing hypos and everything, let's do our due diligence on the C-Vol. for various instruments and talk about it. Even though I talked about it in my blog when I was telling people how to trade copper. What is SIBO? It is like VIX, but for commodities. Same thing. Volatility measure. Here we go. Copper. So I consider copper very tradable when it's at 22. Where are we now? Almost 35. It's insane for copper, right? And I believe that is because of the tariffs. You know, I could be wrong. There could be something else happening, but it's good for me because I've made a boatload of cash this summer. Normally July is very difficult for me, and it's always like, you know, oh, maybe I'll get a scalp here, or maybe I'll get a scalp there. Oh, what's going to happen? And it's difficult. It's very tough making money throughout the summer. Not if something is in a range, because, you know, if you have a good range, then you can just ping stuff up and down. However, when nothing is moving and there's no range, there's no trend, everything is so tiny, you can't trade that. And I've seen copper go all the way down to 34 ticks in July for the entirety of the average daily range. So to come to the end of July with ADR of 241 ticks in copper, that's just like, I don't know who I have to thank, but whoever's making copper move, I at least owe them a drink, you know, at the very least. Maybe even a nice dinner in a 5-star restaurant somewhere. Hit me up. But yeah. Have I tried to trade divergence of Brent and crude oil? Vital, that was something that was working circa early 2000s. And some of they were called arb traders. And a lot of them were doing that. They were trading the arbitrage between Brent and crude oil. However, Brent and crude oil arbitrage and the spread one day diverged and never came back. However, I did explore that as a very early strategy. I think it was 2014. Because that was like a year into me trading crude oil a lot. And I'm like, oh yeah, spread between. Like, let me have a look. And let me see if I can find a historical chart. Let me find one that actually looks good. Yeah, so this one's an okay one. It's a bit of a zoomed out view, but you should be able to glean some data from it. Now, if you look, I don't know whether I can zoom this in. Can I zoom it in? No, it's not. Can we go back? Let me see if I can maybe get the so that's a paid for service. But if I point you to how things were pre sort of 2011, right? You should be able to see it pretty well. So every time the spread diverged, it came back. Okay, so look at it, how it goes above the line, comes back. It goes under the line, it comes back. It goes below the line, it comes back. That's what a spread should be doing, okay? If it's a spread worth trading. Now we get to 2011, and mind you, I started prop in 2013, even though I've been trading since 2007, but I started in Forex. So by the time that I came to trade, so this is where a bunch of traders lost their jobs, and this is why. Spread traders, right? Brent WTI spread. It went away, and they kept adding, they kept adding, they kept adding, but it never came back. Not never, eventually it came back. But what's the saying? The markets can stay irrational longer than you can stay solvent. And that's exactly what happened. So this is the reason why you won't see the Brent WTI spread mentioned a lot. Because it's just not a viable trade, right? So in order for a spread to work, you need to go back to the mean. You need to go back into convergence from the divergence. But if you're constantly away from it, that means either that the correlation is broken down between those two, or they're just not the same thing anymore. And we've had some, you know, a lot of events that have caused a huge difference between the Brent crude, which is Scottish oil, and the WTI, which is a Texan oil, right? So it's just not a viable trade anymore. So by the time that I came into prop, that strategy wasn't a thing anymore, okay? So yes, I did look into it some 13 years ago, 12, 13 years ago, but no, it is not something that I trade. Eloise is saying, can you tell us more about your indicators? I will, yes. So Eloisa, you were one of the people where we were putting out fires yesterday. So the Blahtech indicators are live, they are working. However, yesterday we discovered, because I did like a soft launch for the existing gold members, existing gold members and PDP members as well. And whoever didn't have the latest release of Ninja, the license wasn't connecting. I don't know why they've done it that way, but it's like so dumb. However, the support, yesterday's support from NinjaTrader was actually really responsive. They were total rock stars at the end of the day. We tried to, you know, sort it out through like different things. And in the end, it turned out that as long as the user is on the latest version of NinjaTrader, everything works as intended. So now today we were changing some settings to include the wording that you need to update to the latest version of Ninja. I don't know why. Like, does that mean that now whatever indicator you had prior that was on the prior release is not going to work? Like, you know, so that part I didn't really understand why that would even be a problem. Is it something that they've done so drastically on the licensing server that it only communicates with the new, like, so many questions, right? So. But yeah, the Blahtech indicators are live. They are available from blahtech.co.uk. And that is what you see on my screens. I literally at the moment don't have any other indicators on my chart apart from the Blahtech ecosystem, which is what I used to have back in the day as well. But now we are fully on NinjaTrader. If you go to view products, you have the option of an analyst pack. So that one gives you all 7 of our indicators from the on-chart indicators. And even though individual indicators are priced, you know, quite a bit more per month, 49, 29, 29. You have VWAP and CT, which is a candle timer, that are free. And you have Blahtech better volumes that are a bit cheaper, so $15. But you can get literally all 7 of them for $99 a month. So that's a huge saving. Or if you want to go for a year, that's and even more of a saving, right? So we wanted it that way because, and even with this pricing, I still had somebody in the comments on the post when I said Blahtech indicators are live, they're like, ooh, they're a little bit pricey. It's like, they're pricey? Really? $99 for 7 premium indicators that are over-engineered to high heavens. That's expensive for you? And you work in finance? You're a day trader? It's like, what's going on there? But that's just retail for you. You know, everything is expensive because they have to buy that new eval, right? So it's just funny to me. I don't know. Let's see. Joe is asking me, do you know why there was a harsh sell-off? It's just dealer positioning into the summer. If you look at the daily chart, Joe, it is a range, right? So as soon as it gets into the range, it touched, yesterday we touched the nearest supply, And what does it do? It immediately goes back down. And this is also why, if you look at my hypos from this particular overview on the large time frame, you will see that my longs, even for today, I would expect it to go all the way down to the originating point where we started the longs. This one could go either way. It can go up or down if we ever get there. And then the mean reversion would bring us back towards this closer to the 4150 gamma ball and closer to the value area from yesterday, and also that rejection of a supply. So it's just a range. When you have the range, they will be pinging it back and forth. This is why it's so important to understand where your supply and demand zones are and what is going on the daily chart. If you come to trade intraday and you cannot tell me what does the actual daily chart look like, that means you haven't done your due diligence, and I'm sorry, I don't consider you a serious trader. It's just how it is. Not you, Joe. I'm just saying in general. You have to know what your daily charts look like. Because daily charts, the large time frames, always win at the end of the day. All right, copper is now exceeded and exhausted the average session range. So let's do a similar outlook on copper. I'm just going to have a look again, even though I know what it looks like. So we have a similar situation in copper where you have the daily supply that was rejected. However, to me, copper has more room to the downside, but at the same time, it's too late for any shorts at this time of the day. So I'm going to be looking potentially to fade this to the long side in the form of some sort of failed auction maybe or something. So we'll see what that plays out, how that plays out. That is MGI, market generated information. When it comes to the 4-hour chart, we're dead in the middle. There is a bit of a speed bump around 635. It is possible that we reach that before we do anything else. But unlike gold, which is now in negative gamma environment, copper is still in positive gamma. And even though they are somewhat correlated, they're not exactly twins. So they are definitely different. And we will see how that plays out. And in fact, right now, I would say that they have diverged quite significantly, because look at gold. Gold is pinged back into its own initial balance without the extension. Copper is still at the bottom, trying to extend the initial balance further, but not actually doing much at this time. So the only caveat here is if gold continues to go down, that does have an effect of pulling copper down as well. So we need gold to stop freaking out to the downside. And then we also need copper to start reacting to that long side, which is something I'm not seeing yet. So I'm just seeing that copper is very reactive to the short side. But whenever gold goes up, it's just like, not interested. So until that changes, I don't really want to be doing longs in copper. I am watching Bookmap on my top screen. And delta has been rising. Delta has been reasonably positive. 714 positive delta is quite a lot on copper. Usually it sits around 200. But we also have a possibility of potential long liquidation. So that could be happening into the end of the month as well. If we look at the weekly chart, copper is actually pretty high up. The all-time highs are not too far at all. And usually whenever copper gets anywhere near, like Coach Hoop knows this as well, anytime these metals get to all-time highs, they have this penchant of like huge sell-offs. So again, caution on the long side, but this time of the day does bring mean reversions, especially in copper, which is typically a fade me product. It's not really a continuation product on most days. Not if you look at 3 months, but if you look at 18 months, 3 years, 5 years, how copper normally behaves, it is definitely a fade product. So if anything, I would like this to extend even further downside, and then we ping back, hopefully in an orderly manner where we can catch it to the long side. So we'll see. But yeah, 635 I would like to see definitely before I do anything. For the long liquidations, you don't have to have a reason. It could just be a technical thing where we're coming into the end of July. Maybe they want to go to Hamptons to, you know, sun their bulls or something. But you know, they need to unwind some positions, right? They need to take some profits. They're not just going to be like, la, 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 let's just keep longer gold. It's like, no, let's take a portion of the profits off. And this is what will drive some of these moves. And sometimes, you know, a lot of people who have maybe not traded for, you know, 20 years, they're like, D, why did it go down? Well, it just went down because somebody somewhere decided to either close out a whole bunch of longs or initiate new shorts. And we can never know which of those is true, but we can kind of figure out from the context of the chart location and just, you know, what is going on the day and where the options guys are also located. Eloise is asking how to move a couple of things. All right, a couple of basic questions. What type of a computer do you need as a basic to run the indicators? I'd like to upgrade. I mean, technically, if you're not running all the crap that I'm running, because I do videos, I do streaming, you know, I do bookmap, and then I run 3 different platforms all at once. And then even my Ninja, the way I'm set up, I'm just gonna, you know, show you what that looks like. So this is my middle screen with all of my MGC bots, which will change because I'm making a position sinker, trade copier. And then I have basically a similar thing on one other screen and another screen for, so that's for copper bots and for crude oil bots. So if you don't have all of that, I mean, generally probably won't need too much more than 16 gigs of RAM, maybe something with, you know, at least sort of 8 cores maybe, you know, because we are heading towards monster computer territory. I mean, even 8 cores, I think it would be all right. But it's, you know, half the time if somebody's having trouble with like the speed of the computer, it's probably because you've got a lot of crap on it. So if you clean it up, it might be, you know, it might be interesting to see whether the whole thing would be faster. But if it's a really old computer, then yeah, I would probably upgrade. So let's see, let me catch up. And then the second one, how to move a couple of things like profile TPOs all the way to the right. And ADR table, how to move it down. I think that this should be just a general thing. The fact that my ADR is on the right is just because I compressed the chart, but you can actually change that. Again, these are some new features that my team has implemented, but if you go into settings, so this is the overall settings panel that controls either just the singular chart or the global chart. So if you go into the settings cog, you have chart and you have global, okay? So the chart, the panel gap can be controlled. So let me see. If I can maybe remove my face, that might be useful. All right, so let's do the quick check on what's here. So panel gap, you start to move that, all of these panels start to move across the screen, right? So you can literally put them wherever you want. And if you decide that you don't want to keep that, you don't like the look of it, put your mouse outside of the box and left click, that goes back to the factory settings, okay? And then you can also adjust them up and down. So if you want them to go up, obviously this is like much more fine, but let's say that we want to go crazy and we put 10. What's going to happen there? It's probably not enough. But yeah, you can put them wherever you want, technically. There we go. And then if you want to really move it like somewhere, you should probably just go crazy. There we go. I don't know what is the maximum here, because again, this is my team doing some of the finer points. But yeah, if you're looking to drastically change them, you should probably mess around just with the size of the chart, because obviously they scale with whatever you're doing with the chart, right? So if you expand it to basically the full screen, it is going to go to the left. But if you start compressing it, it will also compress everything to be like that. Now the TPOs should just be on the right. So I don't know if that's your question. If you're talking about the overlay and you happen to have maybe ended up in something like this, if you keep pressing the letter N for November, or for NQ, phonetic alphabet trader style, then it literally works the same way our old indicators worked. So N is to either go graphic overlay or just the volume profile. This is just the volume profile. This is both separated. This is one histogram mirror image on the volume and then TPO on the left. This is just the volume but offset a little bit. So, you know, it's literally the same thing. If you want to change the sessions to see where the other value areas were, you press Y key on your keyboard and you just keep cycling through that. Backtest mode is B to switch on, and then click and drag. You don't even need to do anything with your mouse. You can just drag your mouse, so click and drag to see what the levels look like, maybe in Asia or London, and what actually happened. To switch it off, you press it again and you're out of the backtest mode. So it's all engineered to like high heavens to work as it should, right? So yeah, but if you have like cosmetic things that you want to change, there will be a limit to where you can put them. However, there should be like a general location spot, which is something that's always been a part of our indicators. So let's have a look at the ADR. So maybe it's going to be somewhere in here. And again, I know all of these inputs, but it's been a while since I've looked at them. Generally, your optimizations are pretty good. So let's see. Panel. What happens if you go left? Let's see. It went all the way left. That's a bit much. So that pushed a whole bunch of stuff out. Interesting. Right. What does that do? That puts it back into the chart, which is hilarious. Yeah, so again, it should be somewhere in the settings. I'm not going to spend the entire stream trying to look for it, but usually you have a way to tell it, like whether you want it at the top of the chart, bottom of the chart, middle of the chart. It's generally quite adjustable. I just like it this way because when I smush the chart, it smushes everything, but when I expand it, my chart will probably look the same as yours, right? Where do I get my gamma levels? I get them from my bar charts API, which costs me 1,800 a month. So yeah, this is my Blahtech GL indicator that filters the gamma levels. Here it is, Blahtech GL, available from, you guessed it, blahtech.co.uk. So my gamma levels are filtered to only show you the biggest ones that have some sort of anomalies at them, around them, however you say it. Because I find it, the end of day levels, when you have a whole bunch of them, it's too much. And I just used to like sift through them anyway. And then at one point I was just like, you know what? I'm just going to make my own. And then also you have MentorQ that does intraday, but they do it for, they don't do it for copper, but they do intraday for crude oil, gold, like, you know, some of the more popular ones. And I wanted it on copper, I wanted it on RBOB, I wanted it on a whole bunch of weird instruments that I trade. And yet, nobody had it, you know. And actually MentorQ is the only service that actually serves commodities. Like, they have it for nearly everything. All of the other companies like Spot Gamma and a whole bunch of others, they're equities only and SPX and QQQs. And I'm like, well, what use is that for me as a commodity trader? And this is why you don't hear me talking about them, because I have no use for them. But I wanted to have a service myself where I support 7 different things. And I even support DAX. So if you look on all the products that we support, I'm going to list them for you. Again, I'm not sure that that went into the description. Maybe. It definitely is in the description on the TradingView version. Oh yeah, it is. Yeah, of course. I was the one who built the website. Duh. Yeah, so here it is. Blahtech GL, that's where it is. So you go to blahtech.co.uk, and if you go into products, GL, there it is. So what products do we support? ES, NQ, DAX, gold, silver, copper, and crude oil. So for me to be able to get the data for all of those exchanges, that cost me an arm and a leg. So you're welcome. It's just how it is. Some APIs for options related stuff, very expensive. But as a result, you get to have it for $29-30 a month. So don't tell me that I'm not serving the community here. Have I been trading CL these days? Yes, Ray, I have. Yeah, I've been trading CL. Today's Thursday, and Thursdays recently in the last 2 years tend to go more trending moves for some reason. So I'm not too keen to short it today. Maybe tomorrow. Tomorrow might be a good day to short crude, because anytime it runs away, there's the next day that it just sells off. Because it's just crude, right? But I don't know. I haven't even looked at it today because I haven't traded today. Are things still kicking off in the Middle East? Because if yes, that will definitely be no reason. Yeah, escalating Iran war, of course. So yeah, it's still kicking off. Nothing else has changed. U.S. aggression will be met with a response against ships and interests. Oh, beautiful. So we're, again... This is also one of the reasons why gold and copper are dripping down, because this is the external catalyst that I was saying. Whenever you have risk on, risk off, you will get this sort of behavior where gold starts going down these days. Crude oil, because it's a crude oil related event, goes up because obviously everybody worries about the supply and how it's all going to happen. And then you have correlated products like copper that start selling off because gold is selling off because crude is going up. So yeah, I've been trading it. So typically I find maybe about 3 to 4 trades a week. So that's not bad. It's certainly not how it used to be, Ray. So when we first met, I was probably doing 3 trades on crude oil a day. It's not quite like that anymore. So crude oil for me is now more, let's see whether it extends the initial balance in the overlap pre-NYMEX and then fade that, or if we have a neutral day and then I fade the opposite side. And that's how I've been approaching crude, mainly as a mean reversion strategy still, but in like very particular conditions. I'm not really able to find a crude oil trade that is super high probability every single day anymore. The settlement fade, again, doesn't work as well. NYMEX seems to be the quieter session out of all 3. So anytime I look at what Asia's done, what London has done, it seems like the business is being done in the overnights, and then NYMEX opens up and it's just like, we're not trading. We are, like you say, we're just having margaritas at a level. We are breaking out the loungers and, you know, chilling out and having a bit of a mingle. That's what NYMEX session has been like on crude oil recently. So very far from what we normally are used to. Because, you know, if you guys don't know, Ray and I have known each other since 2019. And, you know, he's been trading crude oil for like, what, 7 years now. It has definitely changed character. Definitely. No fading yet on copper. So we're going to have to wait until the actual London close. Then we'll see what happens. For now, this all looks very risk on sentiment. Why? Because equities and metals are going down. They've been very correlated. And crude oil is going up. It could change, but let's wait until the London close. That is happening in about 6 minutes. Google had earnings yesterday too. Yeah, that's not going to impact gold and copper and, you know, not too much. It's going to have an effect, but nothing like equities normally. Gold is more sensitive than copper to earnings for sure. But again, that's because of the heavy correlation between equities. Normally, if you are going to get involved in earnings, I would not look to outright futures. I would probably look at options because it's too much risk. Like, there's no way that you can position yourself in any sane manner for the earnings release. But there is a way to limit risk very nicely by trading options. However, that's a, you know, whole different can of worms. So, yeah. Do I trade DAX as well in the London close? I don't. I really don't, because I mostly look at DAX as something to trade in the first sort of 3 to 4 hours of London. After that, DAX is technically in the final part of its trading day, and it slows down a lot. And sometimes that's good. Like, listen, sometimes I will trade it, but it's only if we have like some crazy events happening and the equities are just completely untradeable for the regular trading hours. That's when I will go to DAX for the London close, and then I usually get a more sane trade out of it. Today I haven't looked at it much. Again, I had a power cut, so quite frankly, I mean, you can see that I haven't, this is my P&L today. Big old nothing. But also I have 4 accounts that are literally very close to payout again. So I took another couple of payouts last week. Those were Apex accounts. 2 weeks ago, I took payouts from TradingView. So I'm just kind of waiting for the perfect setups to come in so that I can get them over the hump, and then I can get another sort of $5,000, because this is going to be, it's going to be the 3rd payout for one of the Apex accounts, and it's going to be, I think it's going to be the 3rd payout or 4th payout. for another one of the accounts. And then after that, I only have 2 payouts left, and then the account is going to get closed. So I'm actually working on new ones. I've actually just picked up this new legacy, because I used to love Apex legacy accounts. I've just picked up 5 of them. So I'm going to be working on those as well. And, you know, legacy accounts on Apex is what made them into who they are. So it's nice to see them back, at least for, like, until, I think they're going to be here until Wednesday, right? So, yeah. And because my current accounts that I've got with them, they're getting to the point where it's like in the final stretch before they're going to get closed, I have to obviously start thinking about new ones. Because now you get like 6 payouts and then they close the account. So, but I like that. You know, you at least know how many payouts until they shut it down. I don't mind that. And again, with all this live transfers, as long as the firm allows several live accounts, like Trade Day, like Lucid, like I think even Tradeify does like multiple live accounts. I'm cool being live with anyone really. But if it's just one live account, well, what good is it to me? I can just trade my own. So that's one account, right? So there's no like diversification. There's no me trading one account for the Asia session, designating another one for the bots. It's just completely pointless, right? And you know, you go to prop because you want to scale up, not scale down. And what I've felt has happened now in the prop industry, they're all like trying to, because it's not been an easy year for the prop world. It's all like the profit margins are super tight this year because of the gold and silver volatility. It really killed everybody. But they are effectively looking at locking down things, and the way they're locking it down is by giving you crappy live accounts or locking down payouts and stuff. So we're in a really weird situation in prop right now. It's still a good thing to have. Obviously, prop is an amazing tool to scale up money or to get like extra cash on the side if you know what you're doing. And for me, it's always been, oh yeah, let's just get, you know, fun money, right? So I pay for doggy school. I pay for their biscuits. Anytime I need something done around the house, that will come out of the prop. Every time I receive, this is another thing. So with the affiliate cash that I receive, that typically goes towards YouTube production, any kind of subscriptions that I have. Because, you know, I do long form videos as well. And I'm still working on long form videos. I'm not particularly fast in getting them out because this year in particular, I've had 3 different projects that I wanted to finish because I've been working on them for like 2 years. And I finally got better. I'm finally healthier, and I can work, right? But up until literally like April, May this year, I was still a mess. I was still like sleeping like 20 hours a day, barely being awake and stuff. It was still very difficult, but because it's so well managed, my brain came back. And I'm just like flying. It's like 200 miles an hour. And I've managed to finish every single thing that I had in my head. So at some point, once these projects mature and we get them where they need to be, Blahtech is done already. This other project that I'm working on is going to probably be ready in August. And then I'm going to come back. And in August, I'm not sure how much live streaming I'm going to do, but I'm going to replace that with new long-form videos that are going to be in a similar vein as the failed auction videos. So there's going to be some animations. All of that costs money, right? So anytime you want to create anything that is heavy on the production side, it costs in tokens, right? So everything is the whole world runs in AI tokens now. So to me, in order to create a video that is like a 12-minute video, I usually go through probably about, I don't know, probably about 20,000 tokens, because you have to like keep making different versions of it and stuff. And all of that has to come out from somewhere. And I'm one of the people who, I don't like to take from one business and then to put money into another business. So what I do, I use the affiliate payments to cover as much of the cost for whatever I'm doing on YouTube. as possible. And similar thing with prop payouts. Like one of the prop payouts that I got paid for the FX3 camera that I'm shooting on, the Elgato lights, and even this entire computer. So that's what I use prop payouts for. It's not necessarily like, oh yeah, to live off of, but it's definitely like nice cherry on top. And sometimes it's a lot of cash. You know, a lot of the times actually any kind of trading income that I get, whether it's from prop or from personal accounts, it vastly surpasses any other sources of income that we have. And it always makes me, you know, it's always funny because, you know, you like to have your bills covered. But then every so often you get such a large windfall that your bills will be covered for like, you know, a year. And that's the beauty of trading, right? All right, copper might be ripe for the long here. Let's give it a go. Generous, we're going to do a generous stop of 55. I think that's all right. And then I'm going to go back to chat to see what's happening. NinjaTrader desktop. Is Windows, not sure if it runs in Web Ninja. Bjorn, it doesn't. So Ninja Web is an entirely different thing. Entirely different thing. What do you trade if anything, everything down except oil going up? Well, you wait until something settles and then you trade copper. or something. It depends. Like it you just wait for the probabilities and wait for the setup. I don't know. Ray says, I have come back to crude oil after a long time of not trading it. Me too. I didn't trade it for two years properly. And in fact, I didn't trade it so much that Topstep called me a metal trader. Suddenly I became a metal trader. I was always known as the energy trader. And yes, I traded metals as well. But then I completely moved away from crude oil and I traded mostly what? Gold, copper, and platinum. Those became my new products. So it's like, great. Sully says, don't even recommend that personally due to IV crash. Options work better as a hedge. But yeah, hedge, yeah. Again, Sully, you know, that's how you look at things. Other people look at options as, and the earnings as a possibility to make some quick turnaround cash and options that they won't keep forever, especially if it's like on the short side. You know, if you sell an option and you expect something to sell off, for example, you could do, you know, a short call, but you're not going to keep a short call for very long. Why? Because it has an unlimited loss potential. So they will do like a hit and run. And I don't do that. Like my options trades are mainly there. Like, for example, I will do options when I'm trading something like NVIDIA that is like so high up in the price that I just don't see the value of actually buying it outright as a stock. So I will use the options as a vehicle to express my directional view for 40 days or so. And then I'm out. But I personally never trade earnings. So, you know, I'm just not worried that way. You know, a lot of my long-term positions, they are in very good shape because of when I bought them. And that was mainly during COVID. Or even before COVID as well, depends on what they were. There's a company called Too Simple that I used to work for. And then that came with some options, equity options. And I still own those, so you know, it's like... And then Palantir, $9, you know, that's not going anywhere. All right, let's see what we can do here with this copper. Just gonna put bookmap on the side so we can watch it. Positive gamma still rising. If I zoom out, you will see that there's a lot of transactions happening here. That's usually a pretty good sign. And for now, they're just holding. And delta is rising, price is not rising yet. However, that could be a sign of a bullish divergence, because that pressure that's coming in from the aggressive buyers, at some point that should have an effect on the price. Sometimes it gets absorbed, right? So that's the MGI. Things can change, but for now, the way I'm seeing it is just a pretty decent opportunity to try and fade this thing. All right, I'm just going to pop in this similar trade to in a couple of evals that I'm working on. Like I said, I've got the new apexes, but I've also got a those won't be counted. This is just like this funded side of things. But yeah, I decided to get a take profit trader account. However, I can't run bots there, so that's going to be just like one single thing. Anyways, let's try and see if we can make something out of this copper fade. And this is now a copper fade after the London close, which is all fine. And with copper, it's actually an oddity because the LME, London Metal Exchange, that trades copper quite a bit, it closes in another 22 minutes, right? Sometimes you will see the push in the opposite direction continue after the LME close. So we'll see whether this is one of those days. And what is gold doing? Absolutely nothing. Gold is still in the chop zone between 40.50 and 40.45. And it's so funny when you look at where these options are located. I'm now expecting that we're going to stay jammed up between 40.50 and this 40.80 level. And that's probably going to be it for the day. Because in my eyes, I think gold it's done enough today. But copper, because it's a fade instrument, to me has a better potential of actually making it into a proper bigger trade of maybe 2R, but we'll see. Again, it's July, so I'm not really backing on anything. All right. Sandy says, yes, my computer has a very old CPU. Most of the games I want to play can't. Get a console. I've got a PS5 for that reason. Bjorn says, if the goal isn't to go live and they don't give me incentives to not trade my personal account, yeah, no. Exactly. But look, the multiple live, I actually find that pretty attractive. Before, you know, we just had like companies with no live accounts. It was just like Apex never had a live thing. And you still have like people like E8 Markets. They actually approached me when they were running the... they were just kind of coming up with their futures offering. And I looked at it and I thought to myself, well, you were a bit dodgy as a CFD broker and you're still not quite hitting the mark. So, you know, I looked at their offering and I just thought to myself, this is a bit predatory. I don't know. So I decided to say no to them. And yeah, so far, I'm really, and I said, you know, if TopStep was still running affiliates, then I would have them. You know, I wouldn't maybe use them myself, purely because I need a bigger workspace and not TradingView. But, you know, they're still a good company, and as far as payouts go, they probably have the least amount of drama. They're not perfect, nobody is. But yeah, when it comes to the firms that I currently support, it's got to be Tradeify, Trade Day, and Apex. because Apex, self-explanatory, it's cheap, right? So since the new dashboard, yeah, the payouts take a little bit longer to arrive, but they do arrive. Like there's no drama anymore. There used to be drama, and I even got a payout denied back in 2024, I think it was, because I didn't even know that they changed the rules. I was just like, I don't know. And then apparently they retroactively hit me with a 30% drawdown rule, and I'm like, since when is that a thing? This is a legacy account. Like you can't just like what? So I got really annoyed and I moved away from them, and then I didn't talk about them at all for 2 years. But then they changed the dashboard, and I'm like, let me try it. Let me see what it is now. And it's amazing, right? It literally, okay, Traderify has a better graphic user interface. I will give you that. Because when you're eligible for a payout, it actually tells you next to the account, request payout. So you don't even have to think and calculate and stuff. But on our Market Stalkers website, on marketstalkers.co.uk, once you are in a funded account, and once you are trying to navigate that whole kind of worms of consistency and stuff and everything, this is why I needed something to calculate the consistency, right? So this is where you can pick and choose what what the consistency rule is. And yeah, Apex has it, but it's 50%. It's 50%. It's like, it's so easy to hit. You don't even have to think about it. So unless you're like wildly inconsistent in your trading, the 50% consistency rule is so that it's nothing. It's a walk in the park. Now, 20% on the Lightning funded on Traderify, yeah, you have to be a little bit careful. Because to me, I like to have a big fat balance before I request the first payout. And I always like to generate at least about 10 to 14K before I even request a payout. It's just how I like to do things. Not everybody's the same. I know some people, run it up to like 5K, then they request 2.5K. To me, I lose accounts too much like that. And I don't like to keep doing evals or keep paying for the new Lightning funded. So I try to keep my accounts going for as long as I possibly can. And then at some point, if I decide that I got myself into a drawdown or something, I'm like, okay, let's just blow these and start again. That would be the only time that I would do that. But, in the beginning, I really like racking up a nice pattern balance so that when I take a payout, it won't be, oh my God, now I've got my back against the wall, which is what most people do. It's like, oh, I got to get a payout. And look, I get it. If you've never gotten a payout, yeah, you should get it out of the way. But at least make it like, 20 or 30% of the account balance. And that's what I do. But whenever I take a payout, I'm not going to take a $200 payout because that means fuck all to me. Like I spend that in England, even now where I live, which is technically it is outside of London, and it's like the border of 2 counties in the south of England. You would think it would be cheaper, but actually this is a very affluent area, and you literally pop your head out the door and you're like 200 quid out of pocket. Like you haven't even bought anything. I get out, maybe I, get a coffee, or perhaps I don't even know what I would do. Like you would, I don't know, get like maybe a meal or something, and suddenly, somehow, maybe some fuel because you can't live without a car here, and suddenly you're like, oh, I've just spent like £200. On what? Because I've got nothing. It's like, what is it? I didn't go shopping. I didn't go grocery shopping, nothing. I just popped out and suddenly it's gone. So to me, it just doesn't go anywhere. And I really need the payouts to be at least a couple of thousand each. So it's like, and that's why I want to be able to not have my back against the wall if I'm going to take a payout. And that means before I take a payout, it needs to be within 10 to 14K of the balance. So most of my bigger days, they go from 2,000, 2,400. That's just how it is. So if, for example, I want to take one payout and my current balance is less than 114K, that's not going to fall under the 20% consistency rule. So really, I can only take payouts once I get to around about 112, right? So that's why I made this, because I was like sitting there going, oh, I'm with Tradify now, so I need to calculate consistency rules, 20%, what's the... And then I thought to myself, I'm just going to make a tool. So that's on the website, on the Market Stalkers website. So we've got two companies. If you're not aware, Blahtech is the software development. Market Stalkers is the educational side. And Market Stalkers is where I do all the blogs and everything. And you can read the blog for free. They're very, very in-depth little articles and reasons why I built some of the concepts that I built, you know, like average session range. Then if you're not familiar with supply and demand, even though most people are, to a degree, and most of them just explain it as like, oh, that is the area where supply exceeds demand. It's like, no, there's like an actual technical thing that you need to know about how to define them properly and how to look at them. And, you know, and this one is a pretty detailed blog, you know, and you probably already read the one on the gold futures, how different it is, the one on copper futures as well. So it's all there, you know, a lot of value. But as a result, we also have the consistency calculator and the risk reward calculator as well, you know. So you can give your account size, that would be your drawdown, for example. What sort of risk per trade? Now I go a little bit more aggressive, so I will use 3 to 4% per position size, especially if there's some cash in there. And then you can calculate everything here. So does your model actually work? And how much does it work, given what your average numbers are at the moment for this month? So, you know, just some things that I really needed myself. And then I thought, hey, maybe other people would find them useful too. So, yeah. Zafar says, I was profitable trading gold before switching to NQ. After blowing multiple accounts, I returned to gold and found my consistency again. Yeah. Is pouring rain outside helping you trade? It's actually not raining today at all. It hasn't rained for weeks, which is why we have a hose pipe ban at the moment. It's due to rain on Saturday, and it will be very welcome. But right now we're in a very sort of pleasant temperature, which is why I'm able to stream during the day. So it's not a heat wave. It's a nice English summer. Very, very nice. Super dry. But as a result, I can't water my lawn. So that's... you know, slight snag. The funny thing is, my dogs have like a little paddling pool, because you know they love the water. They're water babies like their dad was, and we're always like emptying the pool and, you know, cleaning it and whatever. And the area where the pool is like super lush and green. And then some of the parts of my lawn are now burnt because we haven't had rain for so long. So yeah. And what you're hearing, if you're hearing cars going by, that's not rain, it's the cars. Because my office is right next to the road here. The road is literally on this side. What about Lucid? Again, I'm not sure about Lucid. If I'm going to go to a firm that doesn't allow bots, and they definitely don't allow bots, that means I have to do a lot more work. Now, I'm, like I said, 70% algorithmic trader. And yeah, I want to do my button clicking at some point. However, if I don't have to, I just let the bots do the business. Because it is like me, except it's me through bot form, right? It's dbot. It's dbot. But it's all the same. And it's quite funny, you know. Sometimes when I'm sitting here and I'm like, oh, that's a trade. Let me enter, and then I look at the output of the bot, and it's like sweep latched, waiting, and I'm like, the bot is waiting already. So it's a, you know, it's a lovely feeling to know when you're in sync with the stats and probabilities of the setups that are coming up. And it helps me, you know, it helps me from a discretionary side as well to know that there is a bot looking at a similar trade. So yeah. But yeah, if I'm going to go to a company that doesn't allow bots, it can't be loads of them. So I'm trying to take profit now. If I don't like that, I'm going to try Lucid. But it's not going to be take profit and Lucid. And I'm certainly not going to be one of those influencers that has like a million prop firms. I do a lot of due diligence on the prop firms that I push to you guys. And the reason why is I never, ever want to recommend a prop firm if I haven't taken a payout from them. So it's like, what is the point, right? Because you don't know what their process is, ultimately. You don't know how long it takes. You don't know whether they do pay out, whether they're going to mess with you, whether they're going to find a way to like ban your accounts. And then look at what happened with Alpha. Everybody was like, Dee, you should go to Alpha futures. They're really good. Are they? Because I always thought they were a little bit odd. And then what? They didn't pay their bills. And all of a sudden, they're like, oh shit, we can't pay people. It's like, just go away. It's like, really? If you're going to run a prop firm, run it properly. And if you're going bust, just don't approve payouts to people. Just say, guys, we're struggling. Sorry, we messed it up. We don't know how to do math or whatever. But, you know, many people these days go into a prop firm world without actually understanding how much math and how much balancing there needs to be between how many payouts are going out versus how many subscription fees are being sold versus how much running cash flow we actually have to pay people out and to still keep operations going and everything. Because it's not easy. You know, there's a lot of stuff in the back, on the backside that you really have to take care of. The admin, you know, the payroll of the people who are working for you. And the bigger you get, the more complicated that gets. And no matter how big your companies get, there's always that worry. Like I know that from my business endeavors and stuff. Whenever it's time to like pay people out, it's always that time of the month. It's like, oh God, okay, it's payroll time. Oh shit. It's like, did this person pay? And did we have enough cash coming in from this side? And, you know, can we cover all of this? And, you know, it becomes like tens and dozens of thousands of pounds that you're managing. And it's a great position to be in, but it doesn't get less stressful, if that makes sense. And it's always like a balancing game to make sure that there's enough money. And when you're running a prop firm, which I've done in the past as well, it's always tricky because you're always like, you know, how much payouts am I going to have to pay out? Now, obviously, if you go live accounts, which is why all these prop firms are going towards live, the only expense there is you actually putting up the initial cash. That's it. And that's why all of them are going, well, you'll be starting with 3K per account. But as long as we've got an option of 5 accounts, I don't mind that. That's like 15, 20 grand's worth of startup capital. That's all right. It's when they limit you to 1 account, and the end, that's the issue, right? At that point, you have to wonder whether it's just better to take your money and put it in your own personal brokerage, because at that point, you've proven to yourself that you do have a level of competence. And the only reason to stay with the prop is because you want to scale up your capital. But this day and age has become more difficult to scale up because they're all trying to avoid paying you. And it's just like, how do we get ourselves here? Oh, that's right, sim farmers. Well, thanks, guys. Zafar says, I am very calm. Yeah, it takes, I mean, you know, you can't be reactive as a trader, because that means you're not a very good trader. And in fact, when I was younger, I used to be very twitchy. I used to be very passionate. Like my sister is in chat, she can tell you, I would blow up at like every single challenging situation, and I would defend my views passionately. And then I got into trading, And then over the years, I had to deal with my reactivity and being the Mediterranean woman with a lot of fire. And now it takes so long to like rattle my cage that my husband gets annoyed with me sometimes. Because sometimes we'll be having an argument and he's like, react, get angry, do something. And I was just like, no. And that's the trader in me. Because as a trader, you have to be proactive, not reactive. You can't be irked if you lose a bunch of cash, because that's going to be your life a lot of the times. And in a single day, sure, do I have days when I don't lose at all? Yeah. But most of the time, when you take all of the years that I've traded, my accuracy actually floats between 43% and 62%. We're talking a couple of decades, right? So it's like, what was the worst outcome when I got myself into drawdowns? And what was the best outcome? Well, at one point for about 6 months, I did have 71% accuracy. But did that last past the 6 months? No. And that's why I know that the way I trade, I need to have slightly more positive risk reward than 1.3. So I usually try to stay between 1.7 up to about 2.3R as an average. Most of the time I will manage 1.7. 2.3 is when something extraordinary is happening. So it's not me, it's just like black swan events that are giving me the opportunity to be a lot more aggressive with extending my targets and just keeping trades in longer for more ticks. But most of the times I will plop in a trade for 2R and I will leave it. Okay, so what's happening here, we really need to get over the 635 level. Otherwise, we have a problem with single prints being left behind and then not going through into the single print fade, which is what needs to happen here. If they maintain the single prints, then this will not be a valid trade anymore. Where are the single prints? I will mark them off for you. They're very obvious. They're like a little hole, a gap on the profile. And then that could be just a continuation or whatever they started. However, delta is still rising. So it's gone from like whatever it was, 724. It's almost 900 now. So there is still no reason for me to be kind of super worried here. But they have bounced off of the 635 level already. So they tried to go higher. Somebody hedged. They need to fuck off if this is going to work. So market maker, get out of the way. Crude oil is kind of turning around, but it's nowhere near inside its initial balance either, so that needs to revert. We do have a 4-hour supply, which is this, or is it a daily? I think it's a daily. Yeah, so this is a daily supply, these like little dots. And that needs to fail into the crude oil, back into initial balance, and then obviously start rotating. That will help the copper longs. So if that doesn't happen pretty quickly, then this is a single direction day, and I may just have to grab the pathetic 173 bucks. It's not pathetic. Look, it's okay. It's fine, but you know, it would have been nice not to have a power cut. It would have been nice to actually do some trading, but we'll see. There's still a chance. Hyphen says I'm with Lucid. Had an issue with data not displaying and login issues. Lucid blamed Quantar. Quantar said Lucid controls the feed. Then Lucid said it was my internet. Yeah. Yeah, exactly. Supported Lucid seems to be, yeah, then I've heard this before, and this is why I'm not sure about them. They seem to be like always having a response to whatever is wrong. And it's like, really? Just like admit that something's not right. All right, crude oil is trying to fail. Right, this might be a bit risky, but I'm going to run. This is a late crude oil failed auction. It should have been inside the initial balance already. But because we have the daily supply, And I know it's Thursday. I know it's Thursday. But I might want to try a short here. It's a lot of volatility on crude oil. Ideally, I would want to have my stop above here, but that's not possible. And I don't want to risk, you know, like whatever that would be. That would be 120 ticks at least, because this is 55. That's quite a bit. Quite a bit of tickage. But yeah, let's see what happens with this position here. And I might replace gold with crude oil here. Copper is trying to push. Again, we need these single prints to be closed out. Gold is trying to unglue itself from the chop zone as well, so we've gone above 40.50. And at the very least, it should rotate until this orange line, which is a developing value. This is not a P-shape, by the way. P-shape has to be a very large one candle that kind of goes all the way down during the initial balance, and then you settle the B shape. Did I say P shape or B shape? The B shape, you will settle into the lower third of the entire profile. If you have evenly distributed but still sort of looks like a B, that's not a true B shape. It's just a slower day that got a little bit out of hand in the beginning. Again, I don't know whether this... Maybe I should have gone micros here, but whatever. Which spot is the best for top step? I mean, what are you asking exactly? Because, you know, when I talk about my bots, it's not just one. I've got 7 of the fuckers running, right? And it's all to do with like different parts of the day and different products. So, you know, asking a question that's like, oh, what bot is the best? There's no such thing. Like, it depends on what you're trying to achieve, right? Do you have a bot? And if not, then there's no point, because you can't buy a commercially available bot and trade that on prop. That's against the rules. So whatever bot you're going to use, it has to be yours. Based on your models, something that you coded up, not stolen from ICT or whatever. It has to be something that you actually have done yourself. If it's a commercially available bot, every single prop firm is going to cut your accounts and eliminate them. Crude oil is still slippery, because this is a big bounce. Again, I don't think that 55 ticks stop is enough. Yeah, it should have been like a bigger option. But yeah, oh well, we'll take the 550 loss if necessary. And then try again. We'll get a better trade location, right? Alright, single prints are almost there. Almost tagged. Actually, they might have tagged them. I'm gonna get smacked in the face with crude oil. I mean, it's just slightly above the round number. Not enough. It should be at 30. Yeah, so I will try this again, but on micros. With a bigger stop, because that's what it requires. And this is developing value high now. So let's do 120. And half the size, so 5 micros here. But I'm just going to wait for tape to calm down a bit. Here was a reversal opportunity. This is the bot saying reversal qualifier, but it never kicked it off because we never went to the opposite side. And I'm just going to check. What's your go-to ticker to trade? Copper, HG. So this thing. It used to be crude oil, CL, but and then it went quiet for 2 years, and I yeah, didn't trade it for a while. What is the crime? Says I have HG bottom seller exhaustion at 632.54. This level can run right through this number. Do your own due diligence. Yeah. So this is why I said 635 for me. Was the first area that needed to be run through and then reclaimed. 630 is the next one in the options chain, but it's just getting a little bit too late in the day for that to happen on copper. If they were gonna, and also the initial balance is pretty sizable for copper, so this is why I would rather be long here than short. All right, let's go into another crude oil short because Delta is just fallen sharply down, so we'll see whether that remains. And then my buy limit here is nicely around the 90 level there. And this is a nice comfortable stop loss for the day that is running 547 ticks. So we're using about the 1/5 of that for a stop loss, and this is much more comfortable. And again, I should have done my due diligence. It's just that crude oil has been moving in about 300 ticks recently, and I just assumed that that's going to be the case today as well. So I should have just looked at the numbers, but it's all right, no problem. Again, that's the beauty of 2R, right? If you get 2R multiples, you will still come out. You don't have to like be faultless and always like be like, oh my god, I'm actually not faultless at all. I don't really care being super pedantic on the entries either, and that seems to irk people. They're like, oh, why'd you let it go into a drawdown? It's like, I don't give a shit as long as it works. It's like, I think people are more worried about my trades going into the drawdown than me, because I honestly look at it from a point of view, the outcome is what matters rather than, oh, you know, you are losing a trade, oh, or it's uncomfortable because it's uncomfortable for the viewer if something is going into more of a drawdown than they would like it to. It's like, that's not my problem. But you know, I've shown my my journal on Twitter. And that was I think that was yesterday's snapshot as well. So what matters to me is to look at the P&L from a longer term view, not just like Not just, oh, let's base everything on one single day. But it's like, everybody will lose trades, right? But how does your journal look like for July? Because this is what mine looks like. With, you know, minor differences, because not all accounts are copy traded, but they're all like generally 2 to 3 losing days in a month, and then the rest of them averaging anywhere between 500 up to about 2.5K. So the average is probably 1.5, 1.7, something like that. But you get trolls who are like, dang, you've lost a trade again. It's like, yeah, I've got 50% accuracy. I will lose trades. Like, what's your problem? But yeah, these days, if you lose a trade on the stream, it's like, shock horror, she lost a trade. Ah. And yet I'm like, yeah, but overall in the month, which is kind of what matters. Apart from gold, which commodity would you suggest for newbies to trade? Honestly, I would say copper, because copper is very nice, controlled, non-speculative product. On Top Step, you have micro copper as well, so you can, you know, use that to trade it. And it's a great product for Asia. It's a great product for COMEX. Not such a great product for London, because it kind of tends to go a bit dead. But yeah, copper, and if you're in equities, I would say ES rather than NQ, because NQ is horrendous. Even the most emotionally regulated people get irked by NQ, so it's like, don't do it. Ray says it focuses on the process, not on the dollar amounts. Absolutely. Bjorn is asking, how long and how many data points do you trade a new model strategy in Sim before you graduate to live? So here's my process usually. All of the stuff that I'm doing now, these robots have existed in some shape or form on different platforms since 2015. They're nothing new, right? They are the same strategies that I teach in the Market Stalkers method. Nothing's new, okay? It's all failed auctions. It's all pre-Tokyo range. It's all neutral day fades. It's, you know, auction market theory at a particular time of day. So whenever I'm starting with a new strategy, which is not that often these days, because, you know, I have this 7 core strategies that I normally do, and I don't really need too much more, because that's just working for me. But if I discover that there's something that I've noticed and I want to test it, the first step would be to create just a pure, what I call a counting algorithm, which you can do very easily these days in AI, but using an 18-month sample size. So not 3 months, not 6 months, not 5 years, because that's too long, but an 18-month sample size. So that's the starting point. After that, obviously I create the bot, and the next stage is for me to run it in a replay market simulator. So not even doing this on sim accounts, not even that. Literally just me visually going day to day to see whether those trades even look what they should be looking like, right? So that's step 2. All right, so this trade on crude so far has some legs, but we'll see whether follow through is there or not. We are in the time of day where it should start to sell off, but I don't know, risk off, right? So the third step, once all of that is in a nice little bow and it looks well and, you know, it's all good, then you go to, these days I can use prop firms to test things out. Then I would run it at the very least for 3 months. Once I'm sure that something is stable for 3 months, I can then run it on my own personal accounts. And there's 2, one is a corporate, well, there's actually 3, but one's options. So, you know, that's always me just clicking a button. But the other 2, one is what I call my YOLO account, where I generally keep about 100 grand in there. And then whenever we go over that, I will drag it down sort of every 3 months or so. And the final one is a big corporate account, which I don't touch manually. It's all just bots, so I'm not allowed to touch it. The only thing I'm allowed to do is turn on or off a strategy. That's it. So until we've had all of this process of finding a strategy edge, testing it in just pure no stops, no targets, no nothing. It's just that, well, is this true? Like, let's say you have a hypothesis. Let's say you have a hypothesis that Asia high or low gets swiped and they reverse. And then how many times does that happen in an 18-month period? There are a few things that I look for. The first thing that I look for is that the strategy, before you start anything to do with stops and optimizations, because every time you attach a stop, that's an optimization, right? You then have to see whether that happens often enough in order for that to be a viable strategy that you can trade. If it happens less than 20 times in the 18-month period, that's too low for me, because I wanted to trade nearly every day. I don't want to trade once in a blue moon. And it's like, oh, what was that bot? Oh, that's right. It did a trade like 4 months ago. Yeah, well done. But sometimes people will get hung up over the fact that those 20 trades in a year or in 18 months will have 85% accuracy. And I'm like, that's all very well, but I would rather have something that trades nearly every day at 64% accuracy than something that would trade once in a blue moon for 90% accuracy, right? So that's the second point. I need it to occur frequently enough in order for that to be a viable strategy for me. But I always start from my own experience. I don't just go from, let's grab a bunch of data and see whether I can just see whether the computer can see something. Those strategies to me, and I've tried doing that way because that's how, some of these quants operate. They get a bunch of data and they try to use raw data to come up with an edge. I do it the opposite way. I basically go from my own personal experience of observing the markets and seeing something that I've seen a million times and then trying to code that up. That's why the 7 bots that I have are also pretty successful. I actually talked to one of the prop firms a while back. We were kind of talking affiliate deals and stuff, and they were like, well, we've never had anybody who took a payout with a bot. And I'm like, no, but you don't understand. It's not like one bot, and it's not like I'm running all of them at the same time. I will decide which one to run depending on the conditions, right? That's what a quant strategist is supposed to do. But what I'm guessing is most people do is they come up with one bot, which is like something crappy, like a moving average crossover, which will only typically work in trending markets. So you have to have a very specific conditions before that will even work, right? But no, they're like, So, the reason why my bots are successful is because there's so many of them, there's 7 of them, and I'm the one switching them on and off. So there's the human in the loop. They're not just running off all the time doing whatever. There are times of the year when some of the breakout bots that I have just don't work. But there are also times of the year when things like, and this is especially true for crude oil when it goes really quiet, the only strategy that works when crude oil falls below its own C-vol of 35 is the one where you take a 15-minute orb and then you run along. So it's a volatility regime change, right? And then you just run along until about half an hour after the initial balance. So you're effectively looking at a 45-minute duration, and whatever you grab in that situation, that is the end. So that's the low volatility regime strategy that works. But that bot, I haven't switched on for a year now. Maybe not a year, but let's say 10 months since this whole Iran crap started happening. So you have to be aware of the volatility regime. You have to know very well which of your bots work well in which one. And then you have to be the one to decide whether you will run it that particular day or not. So this is where my experience of 20 years of doing this crap comes in. So it's not just like, oh yeah, you just get a bot and it's all hunky-dory. You can go smoke a spliff on the beach. It's not like that. And it's still a lot of work. There's maintenance of the bots. They go wrong sometimes. They get corrupted. Sometimes you need to adjust the stop losses that they're basing limits on. Some of them have hard stops. So whenever the volatility increases or decreases, that has to be done manually. Other times, maybe the filters of the volume gates that I use need to be adjusted because now we're in July and generally the filters are not going to represent the same kind of strength, even though the setup might be the same. But the strength of the filter needs to be adjusted because of the time of the year and the seasonality. So it's like little things like that that make the whole algorithmic trading work for someone versus people who have very high expectations and they think it's like plug and play sort of thing. It is not. It is still a lot of work. So what do I do half of the day? I'm sitting in front of the stats and research, and I keep running them every so often, at least once a week. I will review what the bots have done and whether some of them need to not run. So, if one of my bots start to lose money for like 3 days in a row, that's my sign to first of all retest it, to see what's changed, and to ultimately switch it off until those conditions come back. How many points to look for in copper during Asia? How does it move? Well, in Asia, you really realistically have a maximum of 130. This is why this is so good, right? So you look at let me remove my face again. You look at this ADR, Blahtech DR indicator, you see that? And Tokyo is 135 ticks. So whatever you do, do not shoot above 135 ticks for a profit. And in fact, for me, the way I approach Tokyo and copper is to have a time stop. So it's either price or time, but usually it's time if I look at it statistically. Because copper, if you run it past, like let's say you caught an earlier breakout trade. If you run it past about 3.5 hours into Tokyo, you're getting into a territory where the reversals are very high. If you then push it for another 2 hours after that, where you're effectively 2 hours before London open, you are in a territory where most trades will revert. So whatever you get up until that point, that's it. So it's not just price, it's time or price. And all of my bots have a cutoff point price-wise and time-wise. If you're somebody who catches trades later, like let's say you're not going for mean reversions that are typically at the edges of the extremes, but you're maybe waiting for a breakout of a pre-Tokyo range like I do, you can generally realistically maybe look at 60 to 70 ticks profit as a maximum. So it's not going to be you catching the entirety of the 135 ticks that you have available on average during the Tokyo session on copper. It's going to be a matter of where you entered, what trade was it, and how good is your trade location on the day. So if you start looking at things from that point of view, everything that you do as a trader stops being about, oh, I'm losing money, or I'm winning money, or I'm the king of the world, or I suck. It starts to be about what is the probability of this setup, and how good of a quality is this entry. Like, what sort of space do I have here? And that's the reason why I don't get freaked out about anything. I'm just like, meh, whatever. To me, it's all just buckets of probabilities over time. That's all it is. That's why I find it really funny when I get people who are like, like we had the guy on Tuesday, right? We'll never see him again because I blocked him. But he was like, oh, you're the best counter indicator. So that's why I said to him, well, then you're not doing very well, especially not this month. Because if you indeed somehow, somewhere, even though I don't know how that would be possible, did get a signal for what I'm doing, and that, by the way, doesn't exist as a service, nor will it ever, you would only be profitable 2 months, 2 days this month, because I've been profitable every other month. Day of the month. So it's like, what are you talking about? But yeah, small people will be small people. So yeah, Bjorn says, I've been struggling with possible overfitting. Don't overfit. So have a set of conditions that are based on the volatility of the product. So for example, if I'm doing stops, some of them have hard stops purely because, for example, copper, I know that 55 tick stop experientially works better than a 35 tick stop. It just gives it more room, and therefore more trades will win. But as a general rule, I actually use a certain percentage of the average session range as a rolling average on a 10-day sample size. So whatever that is at the time of the year, that becomes a stop loss. So you can't overfit it because it's based on data. There's no overfitting. I never, ever look to improve on the backtest. That's one horrible thing that people try to do, where you take a sample of like the last 3 months trades and you're like, but I wonder if I just got the target down from 1.7 down to like 1.5. That's already overfitting. So if you can't find a strategy that reliably has like an average target of, let's say, 1.5 R on a rolling average stop loss of, I don't know, let's say 55 ticks today, but maybe 35 ticks when we're in a quieter period, or maybe if you take gold, 120 in a quiet period, but 300 ticks of a stop in super high volatility craziness, that's all overfitting, right? But it's not overfitting if you have a data point that is based on stats and you just let it run. After you get those data and points, after you get the trades that you've done over a 3-month sample size, if that's not profitable, then the strategy is not good enough. If it can't survive for 3 months, it is not going to survive for a year, 2 years, 3 years, 5 years. Okay? So there are tricks to creating good algorithms that are not overfitted. And it's literally all to do with using scalable data that will change over time with the regime of the market, but you're not required to overfit it. Or for example, for some of my, I have a bot that banks on the liquidity sweep of Asia high or low, and then a reversal to VWAP. VWAP will be positioned at a different point every single day. It is not an N number of ticks every day. It's like whatever the day brings. It is an MGI, market generated information. So on some days, VWAP is pretty far away and has a positive risk reward. But on other days, it's nothing more than a scalp because we're in a more range-bound condition. It's still the same trade, but I'm not overfitting it to go, well, I actually want to get, 200 ticks out of this sweep and a reversal. No, you will get wherever VWAP is on the day. That is the strategy. And that's what makes it so scalable. So try doing that. So don't try overfitting. In fact, I really don't spend any time tweaking targets. Nothing. The target is what it is. If it's not successful, it's not successful. I move on. I literally throw out the strategy and move on to the next idea. I had an idea for a trending strategy from VWAP, which from my discretionary eyes is amazing, right? Because you look at it and you think to yourself, man, on some of these trending moves, return to VWAP and a continuation is an excellent strategy. I tested it, and no matter what I used, over long periods of time, that's a losing strategy for a couple of reasons. First of all, trending moves like we've had today across the board, they're not the norm, and they actually occur very rarely. So if that strategy was to work out in any shape or form, you would first and foremost need to identify that we have a potential for a single direction day. A can of worms immediately, right? How do you determine that? Well, there are ways, but it's difficult, even at the best of times. And then the second point was a test of VWAP can be partially reactive, but how do you know when to let it run? And how, more to the point, how do you explain it to a bot when you should let the trade run as a test and reversal and continuation from VWAP, and when to just cut it super early as more of a scalp? There is no way to tell, okay? Maybe you could do it through looking at maybe the structure of the profile, but then you get into some waters where it will either never trade, or you're looking at, something that might have a possibility of making a lot of cash, but it's going to have like 30%, 20% accuracy. I can't trade like that. So, and I will not run a bot that has a 30% accuracy. Because I'm looking at intraday. I'm not looking at positional trading bots that will run forever and ever. I'm just looking at what can we do in the next 2-3 hours, maybe 4. And if I can't find an edge that happens frequently enough, that is not overfitted, and does have scalable data points that you can use without overfitting anything, then I shouldn't be using that strategy intraday. But there are some books, there are very good books that you can read on algorithmic systems and mechanical trading systems in general. And I will advise you that you do go through them because a lot of them will talk about the problem of overfitting, but also the problem of people putting their own discretionary view and thinking that a strategy is easy to code up, but then you put it in a computer thing and it's like completely fails. Because as humans, we have a very sophisticated way of looking at the market. So we are bio machines, we are computers. And at this point, we're actually much better at figuring out. You take a super highly skilled trader and you pit it up against a simple bot, a super highly skilled trader is going to outperform the bot any day. Yeah? And there's a reason for that. It's because as a human, you have the flexibility of being very adaptable to whatever the market conditions are. That's why we can read profile and derive information from profile as it changes. But you try and code that up into a bot and it falls apart because it starts to go, well, we have single prints, but now is the time for a fade because it's, it's just that kind of a move on copper. However, we have single prints and we're in a single-sided auction. So technically it should be a short, right? And it's like, well, no, because time of day and, we have diminishing volume, but also we have nobody initiating further shorts, right? So that means it's time for a long. Yeah, but single prints, that's what the bot will be saying, right? Well, we have single prints, we can't possibly go against it. It's like, no, we can, because we can go into a single print fade. And then what? I'm going to close this crude oil trade because it's not going anywhere. Julian says, Dee, I've missed you. Thank you, thank you. Sally says, really great content. Thank you for continually being a wealth of information. You're very welcome. But we did have an initial balance and extension in GC by 1 tick. Do you not consider that? I do not. In fact, if you go through the program, you will see that am I still running something here? Hold on. I do not know. So 1 tick is more, especially on something like gold, is literally just a, oh no, it's fine, I'm losing the plot. It's just a slippage, I suppose. It is not a real extension. Maybe if you were talking about copper or soybeans or something that are really quite non-speculative, but gold, if it slips by 1 tick, that's not enough. You actually need to have a proper extension in order to call it an extension. So right now, for me, gold is literally just very much a dead market that is going sideways. It's literally going nowhere. I am going to let the copper trade marinate, so I'm going to give it, I don't know, I might even keep it until the rest of the day, because it's like, and then if it doesn't work, it doesn't work. It's going to be, a third losing day in a month, oops. But that's only going to be on 1 account because all the others are flat, so it's not even going to be a proper losing day. And I definitely need to do something with these power cuts because they're getting really annoying. And there's no reason for it. When it was winter, they were like, oh yes, the wind messed with the cables. And then And I'm like, the wind met what? And I came from London to the sticks, and suddenly they have like super old infrastructure that's just not working. And then we had the heat wave, and they're like, the cables melted. And I'm like, well, what's your excuse now? We don't have rain, we don't have wind, and it's not that hot. So why are we getting power cuts? Yeah, that's old. Yes, it's overloading. I'm like, well, yeah, so I'm gonna have to get like a power source or something, just in case. Because it keeps happening, right? It's happened nearly every single day this week, where everything just either cuts out and then comes back. So it's almost like a spike that doesn't last long, or they just cut it out for like 2 hours. It can't work like that. So my next thing that I'm going to spend money on is proper like power bank, so that I can continue with my bots. And, you know, if I'm streaming and we get a power cut, what happens then? I just drop out and that's it. So yeah. All right, I'm going to go do a dog walk in about half an hour, and I'm starting to melt in the office. It's not a heat wave, but it still gets very hot with all the computers and everything. I'm leaving this copper to do whatever it's going to do. And yeah, so we'll see whether maybe tomorrow I don't know, I might jump on the stream tomorrow at some point. So I think I should maybe be a little more loose with the schedule and just come on whenever I feel like. I know that that's not ideal for people who are like, oh, Dee, what is the schedule? It's like, well, you know what? I worked on a schedule for so long with Top Step that I kind of feel good not having a schedule. Like in theory, Tuesdays and Thursdays should be, you know, 7 a.m. Eastern. But I know that that's quite early for most people. So I don't know. You tell me, does this time of day work for you? Because, you know, some people have expressed a desire to watch me pre-market, but then other people are like, actually, during the day would be nice. I will tell you one thing, I can't do Asia. Like, I did it because it was heat wave, and I just, after the stream, I would be so buzzy that I wasn't sleeping until like 5 a.m. I would be streaming until like 3:30 a.m. and then I just couldn't fall asleep, and it just destroyed me completely. I was so knackered. So I don't think I would be doing Asia very often. It was enjoyable because the setups were easy, but yeah, not good for my health. So yeah, we'll see if we can maybe do like one day this time of day, and then another day we do the pre-market. So yeah, I don't know what's gonna happen. But in the meantime, yeah, we'll try and work something out. All right, chickens, that's gonna be all for me today. So yeah, a bit of an annoying day for me, frankly, with the power cuts. But yeah, we'll see. Overall, a great week for me. You've seen the stats, and yeah, so it's not all bad. It's just I want to see if I can maybe until the end of the day get the 2 accounts into like some profits, because this is a new one, but I want to get the other 2 over the hump so that I can get a payout tomorrow. So I don't know. We'll still have a few hours. Nanka says I'm East Coast and I get up for London. Wow. Yeah, solar farm. They do have something with the solar panels, and I do have a flat roof, but it's a rubber roof. I'm actually looking more into the driveway solar panels because we have a very long driveway, so that would work maybe better in this situation. Probably not this year, next year. I'm sick and tired of property development because we spend like years doing up our Victorian house so that we can sell it. And with the Victorian places, you touch any wall and it falls apart. And you're like, oh my God, what the hell? So it just kept happening. You touch one thing, half the house falls apart. It was just disgusting. So once we moved into this place, we actually said we don't want to do any major works for a while. But yeah, a few minor things maybe. But yeah, I think solar panels maybe next year. Not now. All right, that's all for me. This was the metal markets. So deep into July, I think, and for some reason London and Asia seem to be having all the fun, which is all right. Because yeah, look at that. Look at Asia. Asia went up, so classic cat and mouse chase, right? Asia goes up, London opens, goes down. And then usually what tends to happen is you get post-London, you get another move higher. It might still happen, but yeah, it could take 4 hours because this is copper at the end of the day. So yeah, I'm going to leave this in, not going to touch it. We've got to stop. If the stop gets hit, who cares? We've got another day. It's only one account. So yeah, let's see what Friday brings. Thank you for joining me. As always, this was the Meta Markets. I will see you again probably on Tuesday. Keep your eyes peeled on the community section when I will tell you the time that I'm going to be streaming. It's probably going to be midday. Okay, 7 a.m. Eastern, midday London time. Have a great weekend. If I don't see you, check out my Instagram. If you miss me, I might do a Q&A on the Blahtech indicators and anything else. And that's probably going to be happening throughout the week. And so Friday, Saturday, Sunday, I'm going to try and do that just to keep the engagement going. Until then, have a great rest of the week. Tomorrow's Friday, so don't do anything stupid. Don't give back the profits if you have any. And certainly don't dig bigger holes if you haven't made any profits. And as always, check out the Market Stalkers website and check out the lovely Blahtech indicators that are now live. That's all from me. I will see you again Tuesday. Take care.